The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more, do we go into the breach, dear friends? And as always, we come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
And what do we have going on today? Well, it's the hurry up and wait market. We need to hurry up and wait for Apple tonight. Then we need to hurry up and wait for the Fed tomorrow. Then we need to hurry up and wait for Facebook tomorrow night. And then I think we get some kind of decision in the marketplace. I continue to be extremely worried that as far as market professionals, and not just people talking on TV, but the actual data showing an extreme dearth of people being short anything. There's a handful of stocks out there that attract the gamblers. But for the most part, we continue to see more and more declining bearish sentiment as not put on by those on the financial infotainment shows on cable, but people actually throwing money at the market. I've always had a theory, and that is that markets with some decent short interest means that when you go up, you're not only going to go up a little, you're going to go up a little bit more because, of course, those shorts will probably cover. They tend to be the weakest hands, not the strongest hands in any market. But what happens when you don't have those shorts? Well, certainly you have a lot less out there for the people that want to buy. And we're going to talk about a stock that bounced 50% pretty much on some dubious news of a buyout. But again, when you got 25, 30, 40% of the shares short, all you got to do is make up a good story and run a lot of the shorts out. One of the reasons why a company like Sears or some of the others out here that you know are going bankrupt one day have huge moves in them, and that is that why the cat is away, the mice will play. And there's a lot of things legally that a CEO can do to run the shares. And I was talking to somebody about it last week or maybe the week before. You can actually, as a CEO, own a lot of shares and have those shares in a margin account and then just decide to take them out of the margin account. Let's say that you got 1 million shares or 2 million shares of a stock with 16 million shares of the float. Or somebody like in Sears where you've got just a massive amount in the control of the CEO. He may even call up his buddies and go, I'm taking all my shares out of the margin account. I'm going to just put them into the straight account. So what happens? They all kind of get together and do it. And what happens next? Well, the phone calls go out. There's a margin call. Is it a call because the price went up? No, it's a call because those shares are no longer available. They were taken out of the margin account. Therefore, they have to be recalled, and everybody has to buy them. And, of course, a day or two before that, the CEO bought a ton of shares, more than he had before. And, of course, they're not in the margin account either. So what happens? Well, it does that. And then, of course, the stock goes up. They put the shares back in the margin account. They can't really go and buy and sell shares like we do. So the stock starts to melt back down again. And then they come up with how many different times have we heard BlackBerry come up with some kind of flaky plan that was supposed to save it? How many times have we heard Sears? There were at least 5 different times that I heard Radio Shack come up with some flaky plan before they went bankrupt. There's a lot of money in going out of business. And in rare occasion, you end up with something like the producers on the the Mel Brooks thing, where you sell 1,000%, and some of these guys actually get caught by some of the things they're doing. But for the most time, they can make, you do that 4 or 5 times, you can make 400 or 500% on your money, even in a company that went back down and south in a big way. You can buy, calls on the stock. You run it again. That is why I tend to stay out of stocks where everybody knows the eventual end of the movie. It's those where people still are denying the end of the movie, i.e. Old Yeller gets taken behind the barn and shot. You need some people that believe. And, a lot of companies like Sears, some of the other ones, the belief that bus left a couple of weeks ago. It's not coming back to this town. Our bus service has been canceled, but they can continue to do that. Wash, rinse, repeat over and over again. So just beware of those. We'll talk about some more of those. In the meantime, let's get this show started with a little bit of history.
That it's all just a little bit of history repeating.
It is history repeating, and on this day in 1933, accounts of an aquatic beast living in Scotland's Loch Ness Lake date back 15 years. The modern legend of Loch Ness Monster is born when a sighting makes local news. The newspaper Inverness Courier related an account of a local couple who claimed to have seen an enormous animal rolling and plunging on the surface. The story of the monster, a moniker chosen by the Courier editor, became a media phenomenon, with a London newspaper sending correspondence to Scotland and a circus offering a £20,000 sterling reward for the capture of the beast. Of course, it's never been seen again. They put submarines in there and sonar, and guess what? But I will say on this day in 1933, a great fraud was perpetrated. We live in, let me put it, I live in Clearwater, Florida, and of course Tom and Tommy and a lot of these other folks live down and around here too. And one of the funniest things that happened is we had kind of our own Loch Ness Monster for about 25 years. And I think it was maybe 5 or 10 years ago. I think it was maybe more like 10 years ago. This guy came out and goes, okay, I'm going to admit it was us. They'd made these giant concrete feet that they could move around on the beach and make it look like a monster had come out of the ocean. And his buddy had died. But they had gotten together and gotten drunk in 1968 and decided to build these giant concrete feet that looked like a big animal and move them. They get drunk every once in a while and they go out to the beach, and they just never got caught. But they finally fessed up. And I imagine that maybe we'll never hear about these folks fessing up. My guess is it was a big stick being dragged across the lake, something else. And they took some nice pictures of it. And now it's a tourist destination. Who can say that there's no Loch Ness Monster? I can just prove that they've never found one. On this day in 1933, we'll be back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Like we said, it was all and is about earnings a little bit after the bell. The Fed tomorrow, the earnings tomorrow night, and the earnings today. So we'll get into earnings right now. Hopefully everything is working. What else do we have? Wanted to look at, of course, the movers from last night and this morning. Archer's Daniel Midland, supermarket to the world. I watched the first 2 minutes of those horrible Sunday shows forever, and it was always Archer Daniels Midland, supermarket to the world. Glad I don't watch those. What is it? Meet the Depressed. I think that's on CBS. I seem like that one was one that popped up a lot on Sunday mornings. There were other ones, but Meet the Depressed, that was probably the biggest one. Archer Daniels Midland down on huge volume, a big move back into this February 7th low that had 7.5 million shares. Did get below it today. We got 5.3, so we're at least going to match those higher, I'm going to save 7 million by the end of the day. So we will be very close into this thing. And so far, just a big trading range. No break of that low. A break of that low does take you right back down to $39. Aetna, breaking above the previous high. Volume looks like it's going to come in today. Not a huge move over the previous volume of December 2nd that had 3.5 million shares, 136.50 on that. So I have to look at that. What else do we have going on? AMD. AMD had earnings out. Hang on a second. I don't know who in the world. What else do we have out here? What do we got? down on some decent volume. Sorry, I've got sidetracked out here. You're looking for 942, which is the previous low of January 18th. They really moved down their earnings forecast, and of course, pretty much got crunched. Was about $11 after earnings last night. Continues to deteriorate out here, and again, a lot of people kind of with a broad brush putting this stock in NVIDIA's wheelhouse. These two stocks should not be really confused. The reason why is NVIDIA wrote a very special piece of software so that animators and people in machine learning could use their product for something other than making pretty pictures and playing games. And that has really put NVIDIA in another level. A lot of people were thinking, well, things are going well for NVIDIA. They've got to be going well for AMD. Well, AMD's never really done that same thing. They should have, and they haven't. So NVIDIA's, especially at the high end, been able to do fairly well. Of course, reactions to their last earnings was a gap down. They're back up to lighter volume, kind of filled that gap, and have come back down. So I'm thinking about eventually this thing will probably come back down around $75. They will also, if you've been reading the Tech Insider, I've been writing about what the future competition is for them in that business over the last couple of weeks. And I think it will be pretty big. So I would watch out for any kind of bigger move in the semi-space down and see whether NVIDIA comes with it. Angie's List. This was the stock that I was talking about in the opening monologue, where you just don't want to have a stock where everybody thinks it's going down, or do you want to be in a stock that everybody thinks it's just going to the moon and you can't find a bear? This one had been kind of moving side to side, kind of a weird, unclear idea on whether or not this stock could continue as a going concern. And of course, after earnings, they also said, well, you know, there's some people fooling around and talking about a potential buyout. And of course, if you're short, that's the last thing you want to do. If you're long and you bought this thing in the IPO, you're still down 50% off the original IPO price, if not more. I think the first day it traded, it was back at around $29. We're going to have to go back a little bit further, I think. $28. And so, you know, you've been kind of coming down. The recent heavy low that was not really ever tested was this July 27th low of 2015, $3.73. When we see that, you always know that that is something that probably could get retested. Is there anything really makes you think that someone wants to buy Angie's List? And at this price point, was there someone willing to buy them out at $650? Going to be tough to say. The problem is that even if someone said $650, now you got everybody at $9.90 today, because of course this thing was massively, massively shorted. And why I don't like to go, you know, I may intraday put a short on. I don't do many intraday trades on stocks less than $30. But man, I don't go to sleep with a stock under $30. Just too many of them act exactly like that one, and very hard to make your money back ever. Got a question in the den. Can my opening monologue? Can you show? What was it? Back up in here. Oh, can you do that with futures too? Generally, the SEC takes a dim view of a sitting executive buying futures, puts, and calls. It is deemed worthy if you buy the equity of your own company and or the bonds. But I haven't really seen anybody trying to buy the futures. I think it's kind of a no-no, but I haven't really ever seen that or heard much of it. Normally, what you want to do is the CEO, is you're advertising that you have some idea that the company's going higher, whether it is or not, and you want to buy it and make it public, kind of like the Twitter CEO has done. He bought a couple of million shares or something, and you have to look kind of like that it's a lot of free advertising for them. If they do it right, they also make money and also scare away some of the shorts that are depressing their stock for a while. In fact, let's take a quick look at Twitter, TWTR. And if you're lucky, you get somebody like Mark Cuban go around blowing that the thing to do is buy shares of Twitter, that they turned everything around. Unclear if they have. They're just back up to their gap and on lighter volume, by the way. So this thing is just a bounce in a downtrend right now. You'd need a little bit more volume to make that gap. We'll be back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we had somebody in the den ask me about Microsoft. They're seeing some of the stories out there about a brand new laptop come out, and I haven't had a chance to dig through. They started showing it about 11 o'clock. News articles are sparse. What I do know about the news articles are that they are wrong. Fake news I've seen 3 different articles from 3 different supposed news organizations, and they're all saying, well, this new laptop is $1,000 and competes with the Chromebooks for $200. Well, I've already read enough and went to Microsoft's website and knew that they were wrong. This had been rumored for a while. They've got a $299 laptop that does a lot in the cloud so that you don't have to have as many resources, a fastest processor. And they're basically pushing that as the 10S for the 12th grade and below. Let me put it that way. Anyway, it's going to be $299. It'll run everything that Windows ever runs. It's just a lot of that stuff's going to run on the cloud, like Windows 365, Office, Excel, all that kind of stuff. So it's going to be about $75 more than just a Chromebook that only runs Chrome applications. Whether they're successful with it or not a big deal. What they do have is more of a traditional laptop for $999, and that's what everybody's looking at. So wait for the dust to settle a little out here. It's up a little higher. No volume today. 13 million shares compared to 32 million shares yesterday. So just kind of up on Ether today. I don't think that this really changes a great deal about what they're doing. And you just kind of have to keep an eye on Microsoft. But this seems like fairly rarefied air for most of these big caps up here that are up on light volume. You can be like John, who emailed me this question, and email me at path@tfnn.com. Of course, you can always call me at 877-927-6648. And put a message in the den if you would like. What else do we have going on out here? To take a look at it, Charter Communications out with earnings. Let's zoom back in a little bit. Again, one of these stocks that broke above previous highs on no volume. And when I mean no volume, the January 26th spike had 12 million shares. The spike on April 26th had 1.5 million shares. So 112th, 111th, 110th, something like that. The volume, it pulled right back in, earnings out. This thing's back into the trading range. Gap would take you right back down to about 315 if the market decides to roll over out here. Cummings, a sign of strength, a nice gap. I kind of like it when they open lower and close higher, not open higher and pull back a bit. This is kind of it's a little less than the outright vote of 100% enthusiasm. It got to 163.36. It's done so on some decent volume. By the end of the day, this should be more than enough. You really were looking for 2 million shares to go up against the March 17th high, and you got it. So Cummings, an actual sign of strength and a true breakout. Consol Energy bounced a little. It still needs to go back and test its March 14th low at $14.75. Not much juice today, just not going lower. Coach, another one back up here with huge volume, trying to actually hold its previous July 27th, 2016 high at just a hair under $43, doing so at $43.47 today for a high, but now just kind of toying with that $43 level. You have all the volume in the world. What you don't want to see is a close below $42.94 back on that July 27th low. You'd have the volume. You just wouldn't have the commitment to hold that higher. Other stocks in the energy patch, and we saw the crude get whacked right at the beginning of the show. I haven't had a chance to really go through it. I probably will here in a little bit. But ConocoPhillips earnings takes you right back into this gap, sign of strength on the 31st of March, did so with 13.4 million shares. You're back into it with about half. Unfortunately, you'd probably suggest suggest that this thing goes sideways at least for a few days before you would look any better. If this eats up the rest of this gap, you might see 43.23. It needs to consolidate before you pull the trigger on it, which means that you're going to need to see 3 or 5 days of it going sideways and light volume. CVS Caremark down. Volume has picked up a little over the last few days. It's filled several of these gaps that were out there. Actually, it's filled all 3 of its recent gaps. 76.56 is the next major low out here from April 7th. Volume's picking up a little. Is it a huge weakness? No. But does that look like just a sign of what we're looking at, which is a potential failure? And the answer is yes. Now, I did talk about, let's do this, because I want to show you this. And we're seeing more of these. So hang on a second. Let me bring this up and bring it over here so I can actually do something with it here. We've been talking about these triangles developing in these stocks. Let me try to get this as big as I can. There we go. And maybe a little higher. This is a good example of what I've been talking about, which is you get these triangles setting up, and if you get 3/4 of the way through the apex, the first breakout tends to be the a head fake, and then you do almost exactly this. So if you're looking at some of these patterns developing out here, and you see this, lower highs, higher lows, then a huge break, and it normally comes like that, gaps or a huge candle, but not the kind of volume that you would associate it, maybe just normal volume or sometimes even subnormal volume. You get that push back in, and then it comes right back down. That's exactly what you need to be worried about in a lot of these stocks that are in these narrowing trading ranges over the last little bit. So keep an eye on that. Is deal below similar to CS of App Dynamics? App Dynamics is something below. I haven't seen something below yet. Got a question at the end. What is the large cap companies have the lowest days to cover? Do you have any historical on those compared to other instances when those companies were at similar levels? I'm going to have a clarification on that question. What large cap companies have the lowest days to cover, and do you have historical on those compared to instances of other companies at similar levels? Well, we'll get back with that in just a minute.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
I've got a question that probably is going to take more time than the show has to come out here. I was going through it during the breakout here. I keep fairly decent track of short interest every day. And I can hit a button and know and actually put in how many days back and look for the lowest days of shorts in the marketplace. In fact, normally I set it at about 90 because I'm kind of interested in what's going on now. And the question was basically what's going on with Apple. The 28th of April, we saw just 8% of the shares that day were initiated with short positions. Didn't mean that people went home with them. We also saw the 19th at 7%, the February the 28th at 8%, the 24th at 8%. I could make a bigger report and send it to you if you want to email me exactly what you want at path@tfnn.com. Steve, I'll be glad to send it out to you. But I can also go and look at the highest short interest. And basically, we were looking at the highest actually coming in yesterday at 17%. So we had one day where a lot of people are starting to add, but it's been a while, almost a month since we've seen any kind of shorting at that level. And I just have this thing set up so there's only the top 5 days. I can make a quick change in that and make it longer. So you can go back and look and where short interest has peaked in those before. But from what I'm seeing is yesterday you had a few stocks, and it's not uncommon to see before earnings start seeing a few people short these stocks. But for the most part, it's been one of these things where there's been very light short interest in most of these. And there's so many stocks out there with 2 or 1 days to cover. That's pretty standard stuff. 7 days to cover a much bigger deal out there. But anyway, we were talking about CVS. That is kind of a much bigger deal. Okay. Yeah, I just need to change that out to report out exactly what you want. I just don't do it that way, but maybe a good suggestion for the way to look at some of the data. Of course, if we just look at the charts, you can see the big days that were shorted. A lot of times, huge shorting is a sign of a bottom, and so many times that you want to kind of stay away from it. Last big short day out here for CVS Caremark was back on the 5th of April, and that day, you had the biggest shorting as a percentage of the stock, and of course, within about 2 days later, you've got the stock moving back up. And that's really where you see these big moves back down again. That's where you see, if we zoom in here, you can see the tip of those red volume bars. That's the percentage, or actual volume, not percentage, the actual volume compared to the black, which is the total volume of shares that day. The red is the actual. So they're pretty light out there. If we want to actually talk about it, CBS, the last 4 or 5 days, 15%, 15%, 17%, 14%, 16%, 14%. So that stock kind of came in there at a fairly low level. But if we go back to that day where everybody was shorting the dickens out of this thing back on November 8th, you tend to get everybody, what was that? Was that it? Not November 8th. What is that? April 5th. Is that right? April 5th. That was 33%. That's normally what you will see. Everybody decides the company's going out of business. And as soon as that happens, the market turns right around and runs them out the door. But again, if you want to see big pullbacks in markets, it's this very, very short amount of shorting coming into these earnings things where there aren't a lot of people. And literally, we got 3 gaps all filled at once. Flowers, 1-800 Flowers. We talked about this one going into earnings last night and didn't like that it had fairly light volume. Did kind of spike a little higher, a little lower. I don't know if you can make a great deal out of that. HCA tried to go higher. This thing is kind of got into its gap earlier this morning and pretty much reversed back out of it. Again, all these healthcare companies got to be kind of scared of them now. HCP, not much movement in that one. Let's see, what else do we have? Intrepid Potash had earnings out today. Still no love in this one. A little bit more volume as it gets back down. But my guess is you're going to have to look for $1.24 to buy that on the lows again. Lumber liquidators. We were talking about how these housing stocks all seem to have kind of a theme out here that surround housing itself, and that is just the kind of long-term weakness that I'm seeing in a lot of them. LL got back up into this huge gap down with huge volume on the 21st of May 2015, came down with 15.3 million shares. It just got back into that gap. And of course, what did you get into that gap with? Not 15 million shares, 2 million, 1.3, 1.5. And then, of course, you get the reality back out here, which is the smackdown. And everybody in the last about a month has just gone through it. You had 3 advancing soldiers with some volume. So you're going to probably find support right around this $20 level where this thing is, and that's the first level of support. But more likely, you've got this big gap up from the 21st of February at 6 million shares, and that is probably where this thing is going to come back down to about $16.50. We've got all-time highs in MasterCard, but it wasn't able to really hold those today. You've got again, we've been talking about how many of these stocks are coming out here with these little dojis at the highs, and a big open, a gap down on a lot of these tomorrow or the next day could really set the hook for some decent highs in stocks like MasterCard. So watch for an open around 116.5 tomorrow. That would be enough to set up some of these abandoned babies, shooting stars, whatever you want to call them, up there. But certainly the gap aways that get rejected. Martin Marietta, another one out here. Martin Marietta on earnings, getting volume going through the January 26 high, 243.98, had 800,000 shares. You got 1.5 million shares today. Unfortunately, not holding that high. You're back into the trading range again. So it says don't pull the trigger short on it. But, man, if you're long, you probably take your money because the thing's probably in a trading range now. Molina Healthcare, we saw this come out with news halfway through Steve-O's show. They fired the CEO. I think that's what the news was, something like that. And I guess they didn't think he was doing much. Things spiked to $60.98. this on huge volume, but of course goes back to the volume when this thing got torn apart on 10 million shares back on, what is that, April 29th of 2016. We were just back into that. So are you going to get that kind of volume? Well, it's going to be tough to see. But certainly you've got a lot of supply coming on in MOH at these levels. We'll be back after this timeout.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back. Merck, not much movement on earnings today. Pfizer, again, got kind of a little spike to the downside out here. It was a lot, got down to what 32.88. Recovered a lot of it. Still a little gap down on this. Volume starting to pick up a lot. Again, a lot of these things look like they're in bigger trading ranges. I would say $30.50 is your next opportunity to buy on this. Shopify, again, any of these stocks out here that look like this, watch for the openings tomorrow. If we get a lot of these where we get a lower open tomorrow, you can see a lot of abandoned babies. This one not as pretty as the others, but interesting nonetheless. Nice spike, some decent volume in this one. You generally want to see the spike without any volume for an abandoned baby, but you got to 84.58, gave back a bit of it. Still a nice day for this. A lot of times if you don't get an instant reversal on these, then that pattern has been negated. You need to forget about it. But again, just saying that there's a handful of these things that are getting ready, look like we're going to start seeing these spikes and drops. One way to play the marijuana business was SMG, and this thing has gone up like a rocket since they had their special formula for a special plant that will remain nameless. It had gone up fairly decently. I think it kind of been pushed and overhyped a bit on what they have, and the law is probably, a lot of people thought that they're going to be a little bit more lax this time before the election than now with reality after the election. Probably not going to see the feds get too loose on this. Never made it back up to the top, but certainly down. Got some decent volume out here. Its gap is about $85. Again, you wanted to see, this big sign of weakness going back on the 10th of November. About $85 looks like where this thing is going to go. If it gets out there with light volume, maybe the business in marijuana does pick up. But that's what this thing has run on so far. Speaking of marijuana, THC, Tenet Healthcare out with earnings. There is no correlation, though. I just don't think I would have named my healthcare company THC unless I had something to do with the marijuana trade. This one looking good. Big volume, real sign of strength. Hadn't really broken out through any resistance levels up to the March 27th high at 1974. But, 8.8 million shares. You got 13 million shares today. You need to break the 1974. And I'm going to say you're probably 9/10 there. That takes you to $22.72, one of the better looking ones out here. Another one of the big winners is Texas Roadhouse. It's back up to its previous high with volume. Hopefully, if you're holding this, it does hold this price into the close, which is above $50.49. It's trading right around $51. You have 3.3 million shares now. You're going to have more. December 13th, you had 500,000 shares just going into last fall. So nice gap up, decent volume. Man, going into the summertime, this thing has a tendency to be weak, if I remember looking at the charts from it before. So I would kind of say that, man, if you were long this thing, I'd probably take my money and run. But if you're trying to buy it, you need to get back down to $47 with light volume. So maybe there's no play in this if you aren't already in it. In the meantime, sell when you can, not when you have to. We will see you tomorrow. Same bat channel, same bat time. Hang on for Tom O'Brien and Andy Heck to finish out our broadcasting day.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.